Assalamualaikum and hi everyone. So we are from group 3. We're going to present about chapter 6 and the title is the provision of audit and non-audit services and the issue of independence. So basically these are the contents that we're going to explain in our presentation today. First is audit services versus non-audit services. Then non-audit services will over effects and audit independence. And the third is current regulations on non-audit services provision. And last but not least, issue on independence.
Assalamualaikum, my name is Nur Najah bint Abdul Latif, metric number 832251. So I will present about audit services versus non-audit services. Firstly, I will touch on definition of audit services and also non-audit services. So according to Public Company Accounting Oversight Board, PCAOB, audit services have meaning in terms for both issuers and brokers or dealers perspective. So the first one for issuer, audit services refer to professional services provided for the auditing the annual financial statement of a company. This include reviewing the financial statement included in the company's quarterly report if applicable. And additionally, it covers services that an accountant typically provide in connection with meeting statutory and regulatory requirements for filing financial information during those fiscal year. Meanwhile, for broker and dealer, audit services means that professional services of auditing their annual financial statement along with supporting schedule and supplemental report. It also includes preparing a report on either a broker's or dealer compliance report or exemption report as specified in Rule 17A to 5 subsection G under the Exchange Act. This means that audit services involve professional assistance provided by accountants to make sure the accuracy and compliance of financial statement and report for both companies and financial institutions like broker and dealer. And this assistance include tasks such as examining financial record, verifying the transaction, and also make sure the compliance to legal and regulatory requirement. Okay, next, the definition of non-audit services. It means that all services other than audit services and other accounting services. This means that non-audit services cover any other type of assistance or advice provided by an accounting firm or audit firm that falls outside the scope of auditing and accounting work. These include things like consulting on business strategy, providing IT support, or offering the advisory services on various aspects of business operations. Okay, next, the differences between audit and non-audit services. Firstly, the differences is on the purpose, where statutory audit are conducted primarily to provide an independent opinion of a company's financial statement to make sure that the company present a true and fair view of its financial position and performance in accordance with applicable accounting standard and also the regulation. Meanwhile, the purpose of non-audit services include or consist to various range of advisory, consulting, and other services provided by auditing firm to their client apart from the statutory audit. These services include like internal audit assistance, risk management, IT consulting, financial advisory, and many more. Next, the differences is on requirement, where audit services are usually mandated by law or regulatory bodies for certain type of entity, such as publicly traded companies, financial institutions, and large private companies. This is to provide assurance to shareholder, investor, creditor, and other stakeholder regarding the reliability of the financial information. Meanwhile, non-audit services are usually engaged with voluntarily by the client based on their specific needs and objectives. client, they may seek these services to obtain additional understanding, expertise, or supporting um, various business area beyond financial reporting. Next, there are differences on the nature of services, where the audit services involve examining financial record, transaction, internal control, and other relevant information. Meanwhile, non-audit services involve various services like advisory services, example, tax consulting and risk management. Next, consulting services like IT consulting and internal audit assistance, and specialized service like financial advisory. Lastly, the ethical requirement, where independence is crucial for statutory auditor to maintain the objectivity and impartiality in their assessment. Therefore, auditor must comply to ethical principle and professional standard and regulatory body to avoid conflict of interest or bias. For example, they need to comply to Sarbanes-Oxley Act for public companies. Meanwhile, non-audit services also require auditor to comply to ethical principle and professional standard. For example, comply to IPA code for professional conduct. So overall, it can be seen that even though both statutory audit services and non-audit services are offered by auditing firms, they serve different purposes and also have different scope and requirement, and also require careful consideration of independence to make sure that the integrity of the auditing process.
Assalamualaikum and hi. Now I would like to discuss about non-audit service effect on audit independence. Non-audit service refer to additional service provided by auditors to their audit clients, which are separate from the core audit function. This service can include consulting, advisory, tax, and other service, while offering non-audit service can be lucrative business for audit firm. It raises concern about the potential impact on audit independence. Audit independence is crucial for maintaining the credibility and integrity of financial reporting. From the past research, there's plenty of potential effect of providing non-audit service on audit independence. But today, I would like to discuss three of the effects. There is conflict of interest, financial dependence, and perception of independence. First, conflict of interest. Providing non-audit service create a conflict of interest for audit firm. The financial interest associated with non-audit service may compromise the auditor's objective when conduct the audit. For example, an auditor may be hesitate to issue a critical report in if it jeopardizes the lucrative non-audit service contract. The empirical result of study examining non-audit service and audit opinion are also mixed. On the one hand, Croswell, Marcus, and Seamet, Diffon and al., and Hope and Langley found no relationship between the level of non-audit service provision and the audit opinion. The negative relationship implies that the level of non-audit fees was associated with the lower incidence of audit qualification or modification. However, some studies did not control for circumstances where companies were more likely to merit a qualified opinion. Sharma and Sindhu 2001 Control for Financial Distress Mitigation Factors, Client Size and Audit Reputation. The result indicate the higher proportion of non-audit fees is associated with the lesser propensity for auditor to issue a going concern qualified opinion, implying the provision of high level of non-audit service by auditor compromising audit independence. Second, financial dependence. In audit firm, become heavily depend on revenue generated from non-audit service. There is a risk that they may compromise their independence to retain the lucrative contract. Financial dependence on non-audit service can lead to pressure on auditors to please their client rather than maintain an unbiased perspective. The relationship between audit fees and non-audit fees has been examined extensively. There are two theoretical agreements that imply a negative relationship exists between audit fees and non-audit fees. The first is loss leader agreement, that a lower price audit is used to entice companies to switch to or stay with auditor, so the auditor can obtain non-audit service fees. This might create a threat to auditors' independence. The other agreement is known as a knowledge spillover agreement. The provision of both audit and non-audit service to client would result in knowledge spillover, such as reduction of audit service costs may be achieved. The negative relationship in this case does not necessarily undermine auditor independence. Perception of independence. Even if there is no actual impairment of independence, the perception of impaired independence can arise when audit firms provide a significant amount of non-audit service to their audit client. The perception can erode public trust in the reliability and objectivity of the audit process. Auditor independence is considered as an auditor's ability to offer an unbiased and fair opinion about financial report. It's also believed to the ability of the auditor to deal with all pressure and may influence the quality of reporting. It is their belief that without an independent audit opinion, the auditor is believed to be of no value. The credibility and value of audit are largely dependent upon the reporting quality, which is impaired and influenced by auditor independence. It is also evident in a literature that when the dependence of the auditor compromise the investor and other stakeholder, interest in audit quality is undermined, which ultimately influence the firm negatively. It is therefore valued that the auditor should be free in reporting and behave independently. That's all for me. Thank you.
Bismillahirrahmanirrahim. My name is Abdurrahman Farah Ali. I'm one of members of this group. My metric number is 833189. In my bounty, I'm currently regarding to my bounty current regulations on non-audit service professionals. And firstly, this slide talks about the definitions of non-audit service or all other services that independent auditors of publicly traded corporations could offer to the business under the auditors are referred to as non-audit service. Also, non-audit service also are unaudited services other than statutory audit or service and typically compromises. And non-audit service regulation is very primarily governed by professional bodies or regulatory agencies. But common principle is aims to maintain other auditors' independence and maintain financial reporting integrity. And the auditors are eligible for selection to select or to provide non-audit service into the non-audit service to the extent that their skills and experiences and make them competitive and mostly appropriate of this service. And as subscribed below, these non-audit services are classified into uh, two different types. Mm, First one prohibited and is restricted, and second one non-audit service requiring reapproval if above value. And next slide here talks about or mentions some points that non-audited that are usually covered in legislation pertaining to professions non-audit service. And first point is independence. The word independence, and if I mention it, the word independence or defining, non-auditors must maintain independence from their clients to ensure objectivity and impartiality in their audit options. This is also often includes restrictions on providing certain non-audit service to audit clients. Second one, scope of service. Scope of service and refers to the range. Scope of service is refers to the range of tasks that auditors performance during an auditor engagement. And the third one, disclosure requirements. And disclosure requirements disclosure requirements. If I talk about disclosure requirements, and auditors may require to disclose any non-auditors providing non-auditors service to provide audit clients to their auditors report or other public filings to promote transparency. And the fourth one, approval process. Approval process, and in some jurisdictions, and require auditing firms to seek approval from regulatory bodies or audit committee before providing contain non-audit service to audit clients. And the fifth one, prohibited activities. These prohibited activities may certain a non-audit service may be prohibited altogether to avoid conflicts of interest or other perceptions. And these services might include bookkeeping, valuation, and legal services, and also certain types of consulting. The sixth one, and rotation requirements. These rotation requirements, in some cases, auditors may be subject to rotate requirements to prevent long-term relationships that could compromise independence. The last one talks about monitoring and enforcement. Monitoring and enforcement. This monitoring and enforcement in auditors to revere to the ongoing process and standards that auditors follows to ensure the quality of audit and efficiency. The third slide. The third.
Alright, hi, Assalamualaikum everyone. My name is Natasha Muhammad Saubi, and I'm going to continue with the last agenda, which is issue on independence. So I have picked one issues that happened recently, and the big firm that involved in this issue is PricewaterhouseCoopers, PwC. So the title of the issue is PwC charged with violating auditor independence rules and improper professional conduct, and the issues happened in September 2019. Alright, so the storyline is this SEC found that the PwC and the audit partner violated the SEC auditing independence rules by first performing the prohibited non-audit services during the audit engagement, and second, engaging in management functions. So basically, independent auditors are prohibited from designing and implementing the software system that aggregates source data or generate information that is relevant to the client's financial statements. So according to the order, the audit partner obtain internal approval within the PwC by describing the project as audit services, even though it's already have many red flags and indications that the project already included prohibited non-audit services. Then the audit partner thereafter supervised the PwC in providing the prohibited services, which I think his actions also amounted to management functions because he managed the software implementation process in the organization, and he also directed the employees on what actions to take afterwards. Then PwC also failed to comply with PCAOB rule, where depriving the audit committees of their ability to fulfill their responsibilities to evaluate the fully provision of non-audit services and to assess the potential effect of those services on PwC's independence. And in some point, PwC also miscategorized non-audit services as audit work due to PwC provided such a minimal information that the committee could not make an informed decision about the scope of the work and its potential impact on the PwC independence. So those violations occurred due to breakdown in PwC's independence related to quality controls, which resulted in the firm failure to properly review and monitor whether the non-audit services for audit clients were categorized properly, permissible, and consistent with the work contracted for and approved by the client's audit committees. So in the end, the partner and also the audit firm itself got charged because they violating the SEC's auditor's independence. So the PCAOB rules that PwC violated, there are two. First is rule of 3520, which is rule of auditor independence, and second rule of 3525, which relating to audit committee pre-approval of non-audit services related to internal control over financial reporting. So the PCAOB Rule 3525, as I mentioned just now, is relating to auditor independence. So how actually the PwC violated is because they exercising the decision-making authority in the design and implementation of software relating to an audit client's financial reporting, and also the auditors directly engaging in management functions. While for 3525, Rule 3525 actually meaning of the auditors need to seek audit committee approval to perform non-audit services for an audit client related to internal control over financial reporting. And auditor also must describe in writing to the audit committee the scope of the work. And also the auditor need to discuss with the audit committee the potential effects of the work on independence and the documents, the substance of the independence discussion. So basically, PwC did not do or did not implement those I mentioned just now. So that's actually how they violated the rule of 3525. Then last but not least, the PwC and the audit partner consented to the SEC's orders without admitting or denying the findings, and they agreed to cease and desist from the future violations. So PwC agreed to pay $4.4 million of disgorgement and interest and civil penalty of $3.5 million and to be censored, while the audit partner agreed to pay a civil penalty of $25,000 and to be suspended from appearing or practicing before the SEC with a right to reapply for reinstallment after 4 years.